I want to welcome to the show hedge fund investor Anthony Scaramucci. We know he's also a political consultant and one-time White House communications director under President Trump. Anthony, always good to see you on the show. Hope you're doing well.
You can tell by the roof. I'm like locked in the attic.
That's where you're relegated.
I'm just worried that when it's over, they let me out of here, and I'm not even sure we're allowed to be.
You're gonna have to send us an SOS.
Listen, I don't know what's going to happen.
We got a lot we want to get to with you today, but first I want your reaction to this story that's out there from the Wall Street Journal saying that Citibank has cut ties with your hedge fund, Skybridge Capital, after the fund suffered a loss of more than 20% in March. What is your relationship right now with Citi?
Well, listen, I have a very good relationship with Citi. Remember, I bought that fund of funds from Citibank and Michael Corbat back in 2010. The due diligence team from Citibank, in their discretion, they decided to put a sell on the fund. We think the fund has tremendous value. The great irony of that sell, there's about $150 million of assets that we've gotten from Citibank over the years. I think we're going to keep probably 125 million of the 150. But, you know, look, I mean, sometimes people in a bottom or the middle of a crisis, they want to sell you out. I get that. I'm hoping that will mark a bottom for us, you know, not to get overly esoteric with you and your viewers, but we have a terrific portfolio and it's just the markets being what they are. There was tremendous amount of technical overselling in structured credit. Some of our peers are down 40, 60, and 70% as a result of the crisis. We're down 20. We've made some money back in April. I've added personal money to the fund and I'm going out there and raising money right now. I mean, I have to do it here from my attic, but I'm on the phone 14 hours a day raising money. And, you know, I'm disappointed that Citibank made that decision after a 15-year relationship in the middle of a global pandemic. But the very, very good news is just a sell recommendation. And those clients who Skybridge Capital has a very close relationship with, many of those clients looked at our portfolio and said, hey, wait a minute, I don't want to be selling this portfolio here as the markets start to normalize and the Fed is injecting so much capital into the system. These assets are good and the integrity of the cash flows are good. So, but that's Citibank's opinion on the due diligence side. I might also add that, you know, I've got a lot of senior executives from Citibank that are in the fund that are not selling out their shares. So it's just one of those things. Well, can I just make a statement about the Wall Street Journal, if you don't mind, because I just find this amusing. I've got a $7.7 billion fund. The Wall Street Journal makes a statement that 100 million may come out over time. I mean, I don't know why they're coming after me. You've got funds out there that have lost 6 Skybridges in the month of March, but they're not writing about them. They're writing about me, you know, and so it's fine. I can take it, but I just think it's pretty amusing, pretty ironic.
You know, Citi is saying that, at least people familiar with the matter, according to the Journal, is saying that they wanted to get out of the fund, reduce exposure because you had too much exposure to the credit markets and to mortgage-related securities. Are you rethinking that position right now? Are you happy?
No, I'm not. I'm not rethinking that position. I love that position. I think that you are in the middle of a global pandemic. And there is a fear that some of those mortgages are not money good. But I've gone CUSIP by CUSIP through the fund. Most of those mortgages are in very affluent areas. The loan to value ratios on those mortgages are way more conservative today than they were in 2008. And so since we're talking about our fund, in 15 years, I've only had one down double-digit year. That was 2008. And we rocketed out of that with a 21% return in 2009 and a 17% return in 2010. So I just think it's a bad time to be selling this sort of stuff. And so no, I'm confident in our portfolio. I've been doing this a long time. It's my 31st year in the business. I've seen 9 crises. This is a little different. The gentleman that was talking prior to me, I think he's got a lot of things right, but I don't think we're going down to 15,000 on the Dow. I'm more in Mike Wilson's camp. That we've already tested the low. That low was put in March 23rd when the VIX got cut in half, when the VIX went from 90 to 44 in about 2.5 hours. So I've seen the movie before. This is a little different. We have a healthcare crisis, a oil shock, and a global financial crisis happening at the same time. But remember, when we're able to leave our houses, our infrastructure's in place, our houses are okay, the banking system is in reasonably to very good shape, and there's $12 trillion of stimulus coming from the feds. Either it's the fiscal stimulus, which I've got it calculated now at 6.4 trillion, or the Federal Reserve stimulus of 6.3. So you're replacing about $3.7 trillion of lost economic output with $12.7 trillion coming from the federal government. I like my chances in that market. I'm long our position, and I'm actually raising money from people that see the thing as undervalued the way we do.
Anthony, some investors, a lot of investors awake this morning to see the president looking to close immigration into the country to stop the spread of the coronavirus. Do you think that's the right call? And does that prolong the economic downturn and make anything that the president is doing?
Push it off. It's a racist move, and it's designed to help him with his base. If you go through his internal polling numbers, he's down double digits in most of the swing states that he needs to win. So when he's saying nonsense like liberate Minnesota or liberate Michigan, he's trying to rile up his base. His only play right now is to get the people that voted for him last time to turn out in higher levels than they turned out in 2016. But if you look at what's actually going on, it's the Democrats that have the passion in 2020. Go back to Super Tuesday 3 in Michigan. Joe Biden, you had 500,000 additional registered voters on the Democratic side in the state of Michigan relative to where they were in 2016. So the president is cornered, and he's acting like somebody that's cornered. A lot of the stuff that he's doing is irrational, but that's a racist move, flat out pure racism designed to ignite his base. It has no benefit to the health of the United States or any curative public health or public safety prevention measure to block immigration at this hour. And I think history will reflect very poorly on that.
Anthony, just based on what you just said, should this market have confidence that the president could successfully reopen the U.S. economy?
There's only one way to reopen the U.S. economy, and that is with broad-based testing. And so therefore you can mark out who has the disease so that we can quarantine those people for 14 to potentially 21 days. That's the best chances that we have for the most robust economic recovery. If they open the economy too quickly and you get hotspots like New York and they start to move across the United States, you're going to cripple elements of the economy. I would rather wait an additional 30 to 45 days to get the testing in place, which will ensure that we don't have to do a double lockdown. A double lockdown would be very, very bad. You know, the discussion about 30% unemployment, I totally understand that. But let's go to the next paragraph. You've got $1 trillion that's going to be given out to small businesses, another $470 billion coming right now. So the next paragraph is we're going to go back to work. And those businesses, pursuant to those loans, are going to hire back at least the volume. May not have to be the same people, but it's the volume of people. So those numbers are going to come down very quickly. This is not a systemic recession. This is a recession born from a global pandemic. You have to think of this more like a work stoppage. We're in a global hurricane. We got knocked out of work for 9 to 12 weeks. But when we go back to work, our houses are intact. The infrastructure is intact, the water infrastructure, the electrical grid. Our banks are in reasonably good to great shape right now. And you've got the federal government coming in with $12.7 trillion of stimulus. Everybody take a step back and look at the magnitude of that. And let's continue to layer in money from a stimulus perspective for middle class and lower middle income workers that need it right now as they're transitioning into their prior job or a new job. But I'm very optimistic that we're going to be able to do this as a nation. And it's not going to be one person, the president or otherwise. There's a macroeconomic wave taking place right now that's going to be very, very beneficial to the markets. And I predict we come out of the other side of this in a way stronger position. We'll be back.
I want to get your take, though, on oil, because we're crashing, right? Unprecedented drop in oil.
Mm-hmm.
How does that play into your scenario of, hey, look, when we come back out the other side, infrastructure is in place and we're off to the races?
Well, it's bad in certain ways because we're independent now. So it's bad in certain ways. It's hurting certain states. It's going to hurt the fracking industry that we're upside down on oil prices temporarily. I bet everybody on this television show has probably only filled their car once with gas over the last month. I used to fill my car, once a week, 4 or 5 times a month. Now I filled it one time in 6 weeks. And so you can see the compression and the deceleration of demand, but it will pick back up. And so, to me, I would look at that as a price cut, if you will, or a tax cut for lower and middle income people. It'll be mildly beneficial in the recovery.
Hey, we just saw Trump tweet out about oil. He says, we will never let the great U.S. oil and gas industry down. I, meaning President Trump, have instructed the Secretary of Energy and Secretary of the Treasury to formulate a plan which will make funds available so that these very important companies and jobs will be secured long into the future. What do you make of that, Anthony?
It's probably a good idea. And by the way, whatever my disagreements are with the president, I think that's a good idea. I think the business deductibility, the restoration of the business deductibility for the business lunch, which was taken away, or at least half taken away in 1986, is also a good idea to stimulate the restaurant and entertainment industries.
Anthony Scaramucci, always a pleasure. Good luck there in the attic. I hope they're feeding you.
They are. Believe me, they're feeding me. I'm glad you're only shooting me from here because I got a lot of Corona calories on right now. I got to get back in the gym.
All right. You and all of us. I hear you. All right. Thanks a lot. And be well. We'll talk to you soon.
You too.
More about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.